Hi, everybody. This is Ray Evans at Pegasus Capital Management and Infinitas Wealth Counsel. Greeting you here midsummer 2021. Hope everybody doing well. Hopefully being able to enjoy things opening up a little bit and maybe traveling a little bit, enjoying some vacation. I want to spend a little bit of time briefly talking about inflation and what are some of the ripple effects investment-wise. So clearly in the United States, we have a lot of stimulus going on. There's been about $5 trillion that has been printed in the last year. Literally 35% of all US dollars have come in creation in the last year. So when you have inflation and when you have that much money printed, you have basically three ripple effects. And number one is that your currency gets devalued somewhat. So that's happened to some degree. The dollar has gone down in value versus other currencies. Number two, it tends to make hard assets more valuable when you have inflation. Oil, natural gas, real estate, typically precious metals, literally antique collections, baseball card collections, things like that go up in value when you have that happen. And then number three, because the dollar goes down in value, usually international assets start to appreciate versus US assets. And I'm going to briefly spend a second on what we call the periodic elements chart for asset class returns. And I think many of you have seen this before. I'll make this a little bigger for you. But basically the way this is set up, this gives you the returns by different asset classes going all the way back to 2006 in this case. Best returner at the top, worst returner at the bottom. And in general, this has been a period where we have not had much inflation. So as you might suspect, inflation-oriented assets, hard assets, things like commodities hit the brown box here. They have lagged near the bottom for most of the last 15 years. This has also been an environment where real estate has from time to time been the best performing asset class, but has really been more of a middle of the road asset class during that time period. Having said that, look year to date through the 1st of July, and the best two performing asset classes year to date reflecting inflation have been REIT, real estate investment trusts, and also commodities. And commodities for the first time in many, many years. And so people who have been deep value investors are being rewarded by investing in those categories and having a little bit more emphasis in some of those categories that tend to benefit from inflation. Note what has lagged. Relatively speaking, developed market stocks and emerging market stocks foreign. So we still think there's great value in international stocks, particularly compared to a lot of their peers that have accelerated so much over the last 15 months. And again, if a client is talking to us right now, we're making sure that they have a healthy percentage in non-US stocks. If you'd like a copy of this chart and of this presentation, be sure to let me know. That's Ray Evans. And my email is ray.evans@pegasuskc.com. Feel free to email me or call us. And again, thanks very much. Hope you're having a great summer and look forward to talking to you soon. Take care.